Okay, so you would not believe the amount of people that have been asking me to talk about my Wealthsimple portfolio. Now, this is my Canadian stocks only portfolio, and I know most of my viewers are fellow Canadians, and you guys love it when I talk about Canadian stocks. So we're gonna do exactly that today. We're gonna talk about my Wealthsimple portfolio and what kind of positions I made, whether I bought into a position, whether I sold out of something, all the moves I've been making recently. So this is gonna be a really fun video. I'm really excited. So without further ado, let's jump in. Actually, before I begin, I realized that YouTube is actually a little bit more liberal than I imagined because I've seen other people drink beer on camera and not get demonetized. So yeah, I'm gonna have a drink on camera today just cause it's the weekend. Why not? And before you ask, yes, I am of age to drink. I know I look like I'm like 12 years old or something, but I'm actually 24. So Asian genes, what can I say, right? So the beer I'm drinking today is actually no-name beer, and I saw this at the beer store the other day and I just absolutely had to have it. You know, it was super cheap too. It was $1 per bottle. Like, think about that. We're living in an age where you pay $1 per bottle of beer. I mean, this bottle itself is probably worth like, what, 10 cents? Because it's like nice high quality glass. You can hear that sound, right? So yeah, what kind of a crazy world we live in such that we can have $1 beers. So in case you're not Canadian and you're not aware of the No Name brand, No Name is basically just like a really generic brand that we have here in Canada that's run by Loblaw, which, fun fact, yours truly, myself, used to work for as a data analyst. So yeah, I'm very familiar with the No Name brand, and basically you can see them on all types of generic products, right? They have mostly just foodstuffs, but I didn't know that they had beers. So you know, I walked into the beer store and I saw this and I just absolutely had to get a box. So anyways, let's try this beer and see how it tastes. It's actually pretty bad. It's really bland. It's got no flavor. So yeah, I wouldn't necessarily recommend this for like a beer tasting contest or anything like that. But if you just need something that tastes kind of like beer, I mean, it's $1, right? For the price, I can't really complain. So I'm actually a satisfied customer if I do say so myself, just because of the price. You know, this kind of reminds me of buying stocks too. You know, you can have really expensive stocks that are just way out there and they're really high quality and you can buy them, or you can buy the beaten down no-name brand stocks. And you know, they taste like water, but it's $1, so you know, what do you have to lose, right? Anyways, I'll leave this back here for the rest of this video, and then we'll move on to the rest of the video. So no more delays. So since last time I made that update video on the last portfolio review on my Wealthsimple account, I haven't really made that many moves. So, you know, my bullish thesis on all of my stocks I hold in that account hasn't really changed that much. So, you know, I don't want to risk being too repetitive by talking them all over again, so I'll do the portfolio review pretty quickly. I only have 3 positions right now open in that account, and we'll spend the rest of the video actually talking about a bonus stock that I don't own currently, but I've gotten a lot of questions from you guys asking me what I think of that stock. So we'll spend some time talking about that one. But first of all, let me reveal the first stock in my portfolio, and that is, of course, Air Canada, ticker symbol AC. Now I did increase the position slightly, so I'm now at 250 shares at a cost basis of $16.07 per share. Now this is just under a $4,500 position here today. And yeah, I've talked about Air Canada before. Basically, when it comes to airlines, you know, they don't have the best balance sheets and they don't have the best financials right now in general, right? Because of the Roni situation. But if you look at Air Canada, I do think that their balance sheet does lead the pack because they do have over $8 billion in cash according to their latest report. And for betting on the recovery, I do think that Air Canada does have a lot of upside. And this is just because, you know, if travel gets to heat up again, Air Canada is by far the biggest airline here in Canada. And also, it used to be a $50 stock before the Roni situation, okay? So just let that process in your mind that a $50 stock, you know, in normal times is now trading for like $16, $17 a share. So, you know, even if it gets back to half of where it was before, we'll have a lot of upside from here. You'll essentially like double your money. Also, Air Canada is launching their revamped Aeroplan Rewards program on November 8th. So look out for that. And I know American Express Canada is actually preparing for the release of new Aeroplan cards that they're going to offer, which offer exclusive benefits for Air Canada users. So we'll see how the Aeroplan goes. We'll see how the new Aeroplan program rolls out, and if it goes smoothly. Hopefully it goes smoothly. Anyways, the next stock on the list is of course Ryokan, ticker symbol REI.UN. Now I own 631 shares of Ryokan at a cost basis of $15.18 per share. And I made a video on this a while ago saying that I was going to put $10,000 into this stock. And, you know, granted, it did have a market value of over $10,000 at one point, but it fell back down a bit. So now I'm quite a bit below the $10,000 mark. I think I'm at like 9,200-ish or give or take. So, you know, this is still a $9,200 position, and it's a pretty big position for me, right? So, you know, it might not be $10,000 right now, but don't kill me, okay? So it's close enough for me. And of course, I talk about Ryokan a lot on this channel. In case you're not aware, Ryokan is one of the biggest commercial real estate owners here in Canada. So they own land and they own shopping centers and plazas and whatnot. So they also do have some rental property, like residential rental properties, if I remember correctly. So it's not just like commercial real estate, but it's mainly commercial real estate. And of course, what attracts me to this stock is the dividend. So right now it's sitting at almost a 10% dividend yield, which is absolutely huge. Okay, so it's massive. The reason why this dividend is so high is because the Roni situation, obviously. It's absolutely devastating in retail, and it's devastated the stock price. If you just look at a chart, I mean, it's just fell off of a cliff, right? So as a result, the dividend yield just gone through the roof, and hopefully they don't cut it. I mean, reading the reports, you know, the quarterly reports that just came out, the CEO, Edward Sunshine, he did sound pretty optimistic about Ryokan's futures. So I wouldn't worry too much about a dividend cut just yet, but you know, it could always come at some point, and that's just kind of the risk that you have to take when you invest in a company that gives out like 10% dividends, right? So this is just absolutely massive. So, you know, when you're that high in terms of dividend, there's always a chance that the company might cut the dividend, but for now, at least, I think we're good. So anyways, buying Ryokan is part of my investment strategy to kind of buy these like beaten down stocks almost. So, you know, I do buy high growth stocks as well, right? So I just invested a lot in Slack calls, right? So call options for Slack Technologies. And also, of course, you guys know I'm a big investor in Microsoft, Tesla, Facebook, companies like that. So I do a lot of growth investing, but I also focus on getting some good value on the side as well. So I do see that Ryokan is kind of a value play. So that's kind of my play for that. So it's kind of like, you know, no-name beer versus Heineken. Anyways, so that's that. Now let's move on to number 3, which is not really a stock, but it's my shares in an iShares Silver Trust. So I own 100 shares of this silver ETF at a cost basis of $12.78 per share. Now I bought this as a hedge against currency inflation because obviously central banks around the world are printing cash, right? It's not just the Federal Reserve in America that's printing money. You know, even here in Canada, I don't think we're immune to money printing as well, right? So precious metals is just one way to hedge against currency inflation. And I bought silver instead of gold just because I think that silver is a little bit more undervalued. There's a little bit more upside to have with gold. Now, obviously, silver is a little bit more volatile, so you're going to have to kind of eat the risk of the volatility when it comes to silver. But I do think that silver has slightly more upside than gold, which is why I bought silver. Now, also, I do have some physical silver as well, not just ETFs. So I'll show you a picture of my silver coin collection right now, and you can see some of the cool designs that I've gotten of silver coins. So anyways, those are my 3 positions, and you would notice that there's actually been one change since the last time I made a Wealthsimple portfolio reveal video, and that is I sold my Scotiabank shares. Now, I didn't sell them for like any other particular reason other than to raise money to buy Ryokan, right? So that's the only reason why I sold them. So you know, I could have contributed more cash as well, but also I was like a little bit strapped on cash at the time because I put all my cash in my RBC account and I didn't want to like withdraw because I switched them to US currency as well, right? So I didn't want to convert them back to Canadian and then put it into my Wealthsimple account. So, you know, I was a bit strapped on cash for a while. So I just decided to sell out of my Scotiabank shares and put all the money into Ryokan because I wanted to get to $10,000 as I mentioned in a previous video. So, you know, obviously Ryokan is a little bit more risky than Scotiabank, which is a bank, right? So, Ryokan has significantly higher dividend yield as well, just because they're more risky. So keep that in mind. And I don't know, I might buy back into Scotiabank at some point. So I sold it for around like $58 a share, Canadian-ish. And now it's back down to $55 a share. So it's actually cheaper than what I sold it for. So I might buy back in. So anyways, that's my Wealthsimple portfolio as of September 2020. Now, before I let you guys go, let me just speak briefly on one stock that I don't own, but I've gotten a lot of requests for me to give an update on and talk about. And it's actually on my watch list as well on my Wealthsimple account. And that stock is Cineplex. Now, I made a video about Cineplex a while ago, and I was pretty bearish on it even back then. And, back then the stock was like 10% higher than what it is now. So, let me just say that that video got a little bit more dislikes than usual. So, it wasn't a huge amount of dislikes, but certainly a few people weren't happy. And I noticed that whenever I'm bearish on a stock, I inevitably always get a few dislikes on the video, and people don't like to hear it, okay? But I'm committed to being honest with you guys, and I'm gonna share my honest opinion with you guys, even if I think that a stock is gonna go down even more, or if it's gonna go up, regardless of the direction. I'm gonna share my honest opinion with you guys, and some people might not like my opinion, and that's okay if you disagree with my opinion. But even if you disagree, please don't just say, "Oh, Andy, you're such an idiot," blah blah blah, right? Like, leave a intelligent comment down below and saying why you disagree with me, and I'd be happy to maybe even comment and reply and share my opinions even further. Let's get a discussion going, right? So personal experience, first-hand story, actually, I went to go see Tenet recently, which was only released a couple of weeks ago, and I drove all the way to Silver City, Newmarket to watch the movie, and literally I went on opening night, right? So it was August 26th, and let me tell you guys, the theater was completely empty. So I went at like 7:10 p.m. So it should have been like prime time, right? It wasn't like I went in the middle of the night or something. I went at 7 o'clock. There wasn't even any employees to check the tickets. I literally could have just walked in and not paid. Now, I did pay because I bought my tickets online, but I'm just saying that I could have not paid, and they would never know because there was just like, there were no employees. There were maybe like one person standing beside like the concession stand or something, but there were like nobody to like even check the tickets. I found that like really surprising. Maybe there just wasn't enough customers as well. Like, as I said, the theater was empty, right? So there was like not that many customers. And in the theater itself, everyone had to be at least like 2 seats apart unless you're from the same group, right? Because of social distancing reasons. But I'm telling you guys, even with that social distancing rule in effect, you could have fit at least twice the amount of people in that theater and still had everyone 2 seats apart if you're from a different group. So the theater was literally that empty. And I went on opening night, keep in mind. And this is like a big movie, right? Christopher Nolan, Tenet. And after I finished watching the movie, I walked outside and everyone was like leaving the theater at once after the movie was done. And I could hear my echo down the hall. Like, I could hear my voice echo and bounce off the walls, right? So, you ever seen a store that's going out of business? I know a couple of years ago, or more than a couple of years ago, Target tried to come to Canada, right? And for my fellow Canadians, you guys know how that went down, right? So Target tried to come to Canada and it didn't really work out. So then they pulled out of Canada completely and they just liquidated like all their stores and stuff like that. And, if you ever walk through a Target once it's like going out of business and when it's closing, like all the shelves are empty and all this stuff, and there's barely any people in the store and you can hear your echoes. Yeah, that's what it sounded like. It felt like, the place was going out of business. All I'm saying, guys, is that if I was a Cineplex shareholder, I'd be scared right now. That's all I'm saying, right? So that's why I would not buy this stock. And, you can dislike the video all you want, but that's just my honest opinion. And I'm not too bullish on Cineplex, and what I'm seeing is not good, right? And being Cineplex's movie theater entertainment, it's not like Air Canada where it's like a travel industry. Some people need to travel, right? Some people need to like go places for work. Even though we're now all switching to work from home, there's still some use cases where you need to actually go somewhere to do work and stuff like that. So I think that in the long term, the travel industry will still be fine, but I just don't know about like movie theaters, right? Maybe drive-in movie theaters will be fine, but traditional movie theaters, man, like it'll suffer, right? So I'm just reporting on what I saw. Anyways, So the video is getting a little long and I'll leave it here. Be sure to hit the like button if you enjoyed the video and consider subscribing if you like this series. Be sure to follow me on Twitter and Instagram, links down below in the description as always. And with that being said, I'll see you guys in the next video. Bye bye.